Hi everyone, this is going to be the market review for today, April 8th. Starting with the size of our range, it was quite big today, 201 ticks, so very untradeable and way out of the limits for a tradable range. However, there were still trade opportunities presented today that held with an 18 to 20 tick stop loss. And so, yeah, and there were also a lot of scalp opportunities given even a ping pong was about 100 ticks. So, yeah, just goes to show how MCR gives opportunities no matter what. Even though today would have been a day where you should have proceeded with caution. But we can get into what price did today. We had our first breakout at 926. We traded back into the range at 9:30, so market open. You can see the minute after we retraced deeper into the range. I did not have a good top fortification marked out for today's top of the range. I didn't scroll back far enough to grab one, but you could have jumped to a different low time frame, or like me, I just waited for another wick to appear so that I could mark out the top. As I usually do not take trades right around open anyways, just because it's prone to manipulation, and especially with the big range today. But yeah, I marked out the top fortification as you can see here, but we did retrace into this like large doji almost that you see in the middle of the range. It's not an official point of interest, but as you can see, price reacted to it twice. And with this, I basically just marked it out because this candle alone was 87 ticks in size. So that and it being mostly wick shows that it is a prominent imbalance within our range. So it was something that I just paid attention to. But you can see we rejected from it here. We came up to the top fortification, rejected from the top, came back into that gap, and then expanded up. And so we broke out over the top of the range again at 953. And if you hadn't catch this entry, obviously was nothing to worry about, since there was a second retracement that happened here into our top fortification, and then the next candle over closed over it, showing expansion. And so price began to expand upwards. It was quite slow and choppy, which kind of gives you an idea of where price wanted to go. But we hit the 0.5. We did reject temporarily from the 0.5, but we inched our way up to this wick gap, which was from Friday's New York AM high. And so we hit this wick gap. You can see price failed to get over it. We tapped it 3 different times and rejected from it each time. And so this is when price began to expand down. But before that, we did come up to the 0.5 to use it as support for our move down. And so we expanded back down into the top fortification, continued to travel down, got a closure past the top fortification, and also got a closure past this doji that had proved to be a point of rejection earlier, or a point of resistance earlier. And yeah, we retraced slightly back into it, but continued to expand and close past it. And we also got a closure on the other side of our range, confirming a false day. And so I talk about this quite often, but rejections from gaps like these, or rejections from a standard deviation level, can be taken prior to a day confirming false, because there is a 70% probability that the given day that you're trading will be a false day. So, that is a majority percentage. And that being said, it is likely that your trade will hit. And so you could have taken this short with that assumption, and the payoff was really significant. I mean, depending on where you entered, it was like almost 400 ticks top to bottom, or it was 400 ticks top to bottom. So yeah, could have taken that entry, but we did confirm false and continued to expand down. And we did retrace into the range with the next candle over. So you could have taken a short there. It would have been a small scalp. But as I've said, with a big range like today, even a small scalp was, over 50 ticks. And we rejected around the area of the 0.5 standard deviation, came into our bottom fortification, rejected, came into the 0.5, rejected from there, came into the same doji, rejected from there, came back to the 0.5 and rejected from there. So as you can probably tell, there was a bit of a ping pong that happened between 11 and 12:15. But as I mentioned earlier, even ping pong trades were over 100 ticks given the size of the range. And so yeah, you can see we ping ponged basically between the 0.5 standard deviation and our range, and we broke out of that ping pong with this final tap into the bottom fortification, and we expanded past the 0.5 and got a closure past our London high. And price temporarily retraced to the 0.5, used it as support, and continued moving down. We get a closure past the 1, and then we come into our London low, and we get a closure past that as well. And so this is leading into our PM session. And so price comes up to the first standard deviation and uses it as support to continue traveling down. And that is the narrative that is leading into the start of PM. So for PM session, I was mainly looking at the London low and this last wick of the AM session. And I was looking to see price reject from either of those areas and continue the narrative that had already been playing out. And so PM session starts here. As you can see, we reject from the second standard deviation. We come up into that gap that I marked out, as well as our London low, and we reject from there, expand past the second standard deviation. We come back up to it, use it as support, and continue moving down. At this point, we do react to like an old PM wick, and we move up back into that gap as well as our London low, and we reject from there. We form a doji. As we know, dojis are commonly found at pivots, and you can see here we formed one and then got a closure past it. So you could have taken an entry on the formation of the doji, or for a safer entry on the the close of the next candle. And so this was a pretty significant trade. Had you taken it to just 100 ticks, it would have been hit quite quickly. Or if you did get that doji entry, it would have hit like full TP for 450 ticks. So yeah, we did carry out a rejection here, moved up to the 2, used it as support, continued moving down, wicked past the 2 but still closed under it, and used it as support once again for a quicker move down to the fourth standard deviation, which is when we got our full TP for both this trade and the one before it. And so we expand past the 4, we hit the 4.17 level, reject off of it, but continue to move down into this wick that you see here. It was an old London doji that also overlapped a previous MCR low. It's not expected that you would mark out that exact wick and catch this rejection, but I marked it out just to show you guys that behind every rejection or area of support, there's a wick gap that is providing that reaction for price. So yeah, we come into that gap, we reject off of it. This is another example of a scalp you could have taken even with such a large candle. I mean, this candle alone was 135 ticks. If you had taken a long off the close of that one, an 18 tick stop loss would have held, and you could have hit full TP at the 4 for 164 ticks. So yeah, we come up to that same area, and as we head into market close, we reject from there. And in the last hour of trading, price does not move much as expected, and slowly inches its way up to the 4th, leading to our market close. So that is my review of price today. With these volatile conditions, there are extra levels of risk involved, and so it is advised that you be careful with range sizes like this, but at the end of the day, MCR is always going to provide an opportunity somewhere, and a bunch of people on our server won today, and you can too. So I hope everyone's trading day went smoothly no matter what you trade, but yeah, that is my review of price, and I will see you guys in the next one.